This video, we're going to talk about Spotify. Now, 3 trading sessions ago, we hit the all-time highs in here right around 652. So we have our fib retrace tool on here at the 652 level. And what are we looking at? It's going to be this 23.6 fib retrace first, and then the 38.2. Those are going to be trading right around those 572 and the 523 areas. So obviously, immediately, we're not going to hit those. So what are we looking at beforehand, before we get down there to this first fib level? Well, we have a support in here, and it's kind of confirmed by our 9-day EMA. It's kind of syncing up nicely with that, and that's going to be in between that 622 and that 626 area. And the 626 is really where that 9-day EMA is, and the 622 is where we have our resistance up here. So that $4 channel we're going to watch, because we're going to be trading inside of that for our max pain first. But below that, then we're going to be kind of in no man's land. So as soon as we break from here, there's a good chance we have to go down and touch this upper trend line here from our previous wedge that we have drawn before the gap up. And that's going to be down here at that 583 level. And then obviously below that, then we can worry about that fib retrace level. But really what needs to happen in here, we need some consolidation. We need a pullback, but we don't really have that much volume, and our RSI is super overbought. So we need a whole lot of really nothing in here to get us a move either down or even start climbing back up above that $652 range. Now, we had about a $20 channel that we traded in here today, lows of 620s, highs of 643s. So you get decent moves in here. Ever since the gap up, I mean, you had more days that you had $20 moves. That's comparing the lows to the highs rather than the days where it's not doing anything up here, and these are only $10 moves, but it is a $600 stock, so you have to take that for what it's worth. But what we want to see going forward, the 622, 626 area, is that going to hold? If that is going to hold, then we need some consolidation here, reset this RSI, then we can start working our way up. If it's going to hold and we're going to get low volume and the moves are going to start getting smaller and smaller, not these $20 moves in here each day, then we can try to expect a pullback and hopefully play this to the downside, confirm this break below that 622 to 626 area, and then hopefully work our way down here to this lower trend line. But all in all, we're going to be watching that area. If we dig in deeper, we can go into our 30-minute. We can try to identify other areas of support and resistance. And the first one that we're going to look at is going to be the 630 area of the support, and then up here right around that 641. So if you're just trying to scalp something really quick in here, those are going to be the areas that you're going to watch. And for what it's worth, you had the 9-day EMA almost cross under this morning, but then it started to run away. So we're going to see if this can start to creep back closer to this 200 SMA, and then maybe get some consolidation, a pull back to the 630s, and then a bigger expansion than what we had, because you can see how much it expanded here in the past off the gap ups and then those crazy days that we had in the past few weeks or so. And then you can see that it almost crossed under, and then it just kind of ran away today. So again, just to recap here, we'll go back to our daily chart. We are going to be looking at those 622 to 626 areas. And that's where your 9-day EMA is. And then below that, it's going to be this upper trend line here. Above the 640s, where we're currently trading, going to be that 652 of resistance. Options chain wise, we're looking at an IV rank in here of 18. So low IV, low expected move. We're only around a $12 expected move by the end of Friday session. If you go all the way out to March, right around a $45 expected move in here. So again, not a whole lot of volume on your options, but again, they are fairly cheap relative to itself, and they are actually kind of pricey. That's just because you had all of these big moves in here. So when we got to explain when we're saying pricey, just because it's a bigger stock and you having these larger moves, but IV relative to itself, it's actually fairly cheap. So it could be a whole lot worse. You could have a whole lot of IV in these. These are just juice because of the expected moves in there. All right, guys, if you like this video, make sure to check us out on all of our social media. We also have a Discord service if you are interested, and you can find all of our socials in the description below.